and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. The Cryptocurrency News End channel does not recommend any offers to buy, sell, invest, etc. in the cryptocurrency market in any way, and any losses and other consequences are your responsibility. Our channel only follows the news of the cryptocurrency market and does not provide you with any advice on making transactions. Please enter into transactions in the market with your own analysis. Crypto market on the brink. Bitcoin and altcoins face critical support levels. Bitcoin price soars back to $84,000 after brutal crash. Is this the last big buying opportunity? Bitcoin enters optimal DCA zone. Is this the last buying opportunity before a major rebound? BlackRock's shocking move. Bitcoin ETF now in $150 billion portfolio. But is crypto at risk? Bitcoin price crash sparks panic. Is this a bear trap or a sign of worse to come? Crypto market on the brink. Bitcoin and altcoins face critical support levels. Bitcoin's wild ride. Can it recover, or will altcoins drag the market lower? The cryptocurrency market is once again facing turbulence as Bitcoin, BTC, battles to hold crucial support levels. After briefly dipping below $78,000 on February 28th, Bitcoin quickly rebounded, signaling that dip buyers remain active. However, the question remains, is this the start of a sustained recovery, or is another crash on the horizon? Bitcoin's struggle, a make-or-break moment? Bitcoin's price action has been volatile, with BTC falling from $86,988 to $78,258 before rebounding. CryptoQuant founder Ki-Young Ju warns that selling in the middle of a correction is a rookie mistake, citing historical trends that have seen Bitcoin surge to new all-time highs after deep pullbacks. Adding fuel to the speculation, a Bitcoin whale known as Spoofy reportedly purchased 4,000 BTC, worth approximately $344 million, between $82,000 and $85,000. If BTC fails to break above the $85,000 to $90,000 resistance zone, however, it could signal further downside, potentially testing the key support at $73,777. Ethereum struggles below resistance. Ethereum, ETH, is also facing uncertainty. The price rebounded from $2,111 but remains under pressure. The 20-day EMA at $2,611 presents a major resistance point, and a rejection here could send ETH back toward $2,000 or lower. Conversely, a breakout above the downtrend line could set the stage for a rally toward $2,932. Altcoins in freefall. Will they recover? XRP. XRP dipped below $2.06 before recovering slightly, but the resistance at the 20-day EMA remains strong. If bulls fail to reclaim control, a drop to $1.77 is possible. BNB, Binance Coin, BNB, is attempting to recover from $557. But if it fails to break above $634, a collapse to $500 or even $460 could be imminent. Solana, SOL dropped below $133 before rebounding. The next major resistance sits at $147, but failure to hold could see prices plummet to $110. Dogecoin, Doge remains under pressure, struggling to reclaim its support line. If sellers maintain control, Doge could sink to 15 cents or even 10 cents. Cardano ADA is testing a key support level. A breakdown could trigger a move to 50 cents, with further downside risk to 33 cents. Litecoin, LTC is stuck in a symmetrical triangle, indicating indecision. A breakdown from the 50-day SMA could send LTC tumbling toward $80. Chainlink, Link is fighting to hold support. If buyers fail to step in, a drop to $12.71 or even $10 is likely. Avalanche, AVAX is on the verge of breaking below $20. A further decline could push it to $17.29, with potential downside to $15 if the level fails to hold. Will Bitcoin's rebound hold, or are we headed for a crypto market meltdown? XRP price to $18,000? Shocking forecast sparks controversy in crypto community. XRP investors face wild predictions as some analysts see $18,000 price target. The cryptocurrency market is no stranger to extreme price predictions, but the latest XRP forecast is turning heads. According to a controversial report, XRP could skyrocket to an astonishing $18,000 per token. This prediction, made by a research group, is based on a valuation model that envisions XRP becoming a dominant force in global transactions. However, is this price target grounded in reality, or is it just another overblown crypto fantasy? Bitcoin's past proves anything is possible. Skepticism in crypto price predictions is nothing new. In 2018 to 2019, the idea of Bitcoin, BTC, reaching $100,000 was mocked by traditional economists. Yet, BTC later surged past $69,000, silencing many critics. Now, the XRP community, one of the most dedicated and passionate in the crypto space, is buzzing with excitement over this latest forecast. Following Donald Trump's election victory, XRP surged to new highs, briefly retesting its all-time high of $3.41. However, Ripple's long-standing battle with the U.S. Securities and Exchange Commission, SEC, remains unresolved. Despite this uncertainty, social media is flooded with bullish predictions, ranging from $100 to a jaw-dropping $18,000 per XRP. Breaking down the $18,000 XRP price prediction. In June 2023, just before XRP was declared not a security by Judge Nalysis, a research paper titled A Comprehensive Approach to Determine the Fair Market Value of XRP was published. This white paper, produced by Valhall Capital, used 5 valuation models to estimate XRP's future price, with one model projecting an astronomical $18,036 per coin. The analysis was based on the discounted cash flow (DCF) method, assuming that Ripple and the XRP ledger (XRPL) would handle a substantial portion of global transactions in the next decade. The model's assumptions included global transaction volume, $104 trillion. Economic growth rate, 2023 to 2032, 2%. Discount rate applied, 10%. Total transaction present value, $915 trillion. XRP circulating supply, 50.7 billion. Projected price per XRP, $18,036. Under this scenario, XRP would replace traditional financial settlement systems like SWIFT, making Ripple the backbone of global remittances. If this vision materializes, XRP holders would become some of the wealthiest individuals in the world. Does reality support this extreme prediction? As of February 28, 2025, no U.S. bank has officially confirmed full adoption of XRP for cross-border payments or internal transactions. RippleNet has partnerships with major banks such as JP Morgan Chase, Wells Fargo, and Citigroup, but only PNC Bank and Bank of America have verifiable collaborations. Rumors about Bank of America B of A using XRP for all internal transactions have been widely circulated. A viral clip of David Struczewski, CEO of Sound Planning Group, claimed B of A has relied on XRP for 2 years. However, XRP Ledger's transaction volume does not align with the scale of internal operations at a financial institution of BofA's size. Another rumor involved Wells Fargo allegedly approving XRP for loan and credit card payments. This claim was widely shared on LinkedIn but was refuted by a Wells Fargo employee in January 2025, stating, "Not true." Why spread fake news? Will XRP overtake traditional payment systems? Despite speculative predictions, XRP has shown strength in recent months. The cryptocurrency has been gaining institutional interest, and multiple spot XRP ETFs were filed in February 2025, signaling a potential bullish outlook. However, when analyzing XRP's real-world adoption, it falls far short of the white paper's grand projections. The idea of XRP reaching $18,036 by 2030 remains highly improbable. Could XRP's real-world adoption eventually justify a price above $1,000? Or is this just another exaggerated crypto dream? Bitcoin enters optimal DCA zone. Is this the last buying opportunity before a major rebound? The recent Bitcoin (BTC) crash has sent shockwaves through the crypto market, triggering widespread panic among investors. However, seasoned analysts warn that this might be the last golden opportunity to accumulate BTC at a discount before a potential price explosion. Bitcoin plummets below $80,000, a warning sign or buying signal. Bitcoin's price nosedived to a new yearly low of $78,258 on February 27th, erasing billions from the market in a matter of hours. The sudden drop has left investors scrambling for answers, but on-chain data suggests this crash may be a disguised gift for long-term holders. Bitcoin's 60-day RCV metric flashes optimal DCA signal. According to crypto analyst Krasiblock, Bitcoin's 60-day realized capitalization variance RCV has hit a historic low of -1.9, indicating an optimal dollar cost averaging DCA opportunity for the first time since July 2024. Historically, whenever the RCV falls below 0.30, Bitcoin enters a low-risk accumulation zone that has previously led to major price recoveries. This metric, which evaluates the relationship between Bitcoin's market cap and its realized capitalization, has accurately signaled undervaluation periods in the past. When RCV enters negative territory, it typically suggests that Bitcoin is trading at a discount relative to its fundamental value. Long-term investors should consider scaling into BTC positions via a DCA strategy as risk-adjusted conditions remain optimal, Krasiblock noted. In mid-2024, Bitcoin fluctuated between $70,000 and $50,000, while RCV signaled a similar buying opportunity. However, analysts warn that while RCV identifies low-risk entry points, it does not guarantee an immediate price bottom. A short-term dip is still possible before BTC resumes its uptrend. Short-term holder SOPR suggests Bitcoin is severely oversold. Adding to the bullish case, crypto analyst Yancey Dent pointed out that Bitcoin short-term holder spent output profit ratio (SOPR) has sharply deviated below the lower Bollinger Band. Such extreme deviations have historically led to price rebounds between 8% to 42%, even during brutal bear markets like 2022. When SOPR deviates this drastically, it signals that short-term holders have capitulated, Dent explained. Historically, these conditions have preceded major price recoveries. Bitcoin whales dumped 6,813 BTC, the final shakeout? Despite the bullish on-chain signals, whale activity presents a concerning picture. Data from Sentiment reveals that wallets holding 10 plus BTC have dumped 6,813 BTC over the past week, their largest sell-off since July 2024. Historically, heavy whale distribution has coincided with market bottoms, but it also suggests that a final shakeout could still be in play. Meanwhile, Ki-Young Ju, CEO of CryptoQuant, highlighted that Bitcoin's spot ETF demand remains weak, indicating that institutional accumulation is on hold for now. ETF demand has slowed, and whales are distributing, Ju warned. A price recovery could take some time. Will Bitcoin's recovery take off or collapse further? With multiple conflicting signals, traders are left wondering, is this the last chance to buy Bitcoin below $85,000? Or is another catastrophic plunge on the horizon? The answer may lie in upcoming macroeconomic factors, ETF inflows, and whale behavior. Will Bitcoin soar past $100,000 in the coming months? Or are we facing another bloodbath? Let us know your thoughts. BlackRock's shocking move. Bitcoin ETF now in $150 billion portfolio, but is crypto at risk? BlackRock's billion-dollar bet on Bitcoin ETF, a game-changer or a looming crash? In a move that could shake the financial world, BlackRock, an investment behemoth with an eye-watering $11.5 trillion in assets under management, has officially added its iShares Bitcoin ETF Trust, IBID, to its high-stakes $150 billion model portfolio product. This bombshell development, first reported by Bloomberg on February 28, signals a major shift in institutional adoption of Bitcoin, BTC. But is this a sign of long-term bullish momentum, or could it spell disaster for retail investors? A calculated risk or a dangerous gamble? The BlackRock Investment Institute report states that Bitcoin allocations in these model portfolios will range between 1% to 2%. While this may seem like a small slice of the pie, the firm justifies the limited exposure due to Bitcoin's infamous volatility, which they claim remains a reasonable range. Any larger allocation could drastically amplify portfolio risk, an admission that should set off alarm bells for investors hoping for a smooth ride. The $150 billion portfolio is a collection of carefully balanced investment strategies sold to financial advisors managing client assets. It offers a blend of growth, income, and capital preservation investments, making BlackRock's inclusion of BTC ETFs a significant endorsement. Yet, the question remains, will this exposure fuel Bitcoin's long-term adoption, or are we heading toward another institutional-induced crash? A $10 trillion sector in the making, but at what cost? In 2023, BlackRock forecasted that the model portfolio industry would explode to a $10 trillion business over the next 5 years, up from $4.2 trillion at the time. If these projections hold, Bitcoin ETFs could soon become a cornerstone of mainstream financial products. However, history has shown that institutional involvement in crypto can be a double-edged sword, capable of driving massive rallies but also brutal sell-offs when firms shift their allocations. Other financial giants have weighed in on Bitcoin's place in traditional portfolios, particularly in the widely used 60-40 stock-to-bond investment strategy. Fidelity's 2024 report warned that while BTC could enhance returns, even small allocations could introduce exponential risk. Meanwhile, J.P. Morgan echoed similar concerns in December 2024, stating, "While Bitcoin's returns have been impressive, they've come with extraordinary volatility." Bitcoin's wild ride. Is the market ready for more chaos? Bitcoin's notorious volatility was on full display on February 28th, as prices swung between $85,122 and $78,215 within hours. The broader macroeconomic landscape, ranging from escalating geopolitical tensions to whispers of a global trade war, has further unnerved investors, adding fuel to BTC's price swings. Even BlackRock's own Bitcoin ETF has been caught in the turmoil. On February 26th, IBIT saw a staggering $420 million in outflows, the highest single-day withdrawal since its highly anticipated launch in January 2024. Other Bitcoin ETFs followed suit, with CoinGlass data showing total outflows surpassing $756 million in a single trading session. This mass exodus raises a pressing question. Are institutions preparing to dump their holdings, leaving retail investors to pick up the pieces? Fear reaches extreme levels. A warning sign? The Crypto Fear and Greed Index, a critical gauge of market sentiment, plunged to extreme fear territory on February 26th, hitting a dire score of 10. The last time this level was seen? June 2022, when the catastrophic collapse of Three Arrows Capital, 3AC, sent shockwaves through the crypto market. If history is any indication, such extreme fear levels often precede violent market swings, leaving traders and investors at a dangerous crossroads. Despite the chaos, Michael Gates, lead portfolio manager for BlackRock's Target Allocation ETF model suite, remains optimistic. In his February 27th commentary, he asserted, "We believe Bitcoin has long-term investment merit and can potentially provide unique and additive sources of diversification to portfolios." But will this corporate confidence be enough to calm investors' nerves? Is BlackRock's Bitcoin bet the ultimate bull signal, or are we on the brink of a market meltdown? Bitcoin price crash sparks panic. Is this a bear trap or a sign of worse to come? Crypto traders are on edge as Bitcoin struggles to find stability following a brutal sell-off that wiped out billions from the market. With BTC prices swinging wildly between $72,000 and $85,000, many are questioning whether this is the ultimate buy-the-dip moment or a sign of even deeper trouble ahead. Bitcoin's sudden drop leaves investors stunned. Bitcoin, BTC, briefly rebounded to $85,000 on February 28th, sparking hopes that the worst of the downturn was over. However, those hopes were quickly dashed as BTC failed to secure a higher daily close, leaving traders wondering if the worst is yet to come. Data from TRDR.io reveals that Bitcoin saw a significant buy wall on Coinbase when its price plummeted to $78,300, its lowest point in 2025 so far. But with spot demand remaining uncertain, the question remains, will bulls muster enough strength to keep BTC afloat? Or is another devastating drop imminent? Traders brace for more volatility as Bitcoin establishes a new range. According to veteran crypto analyst Magus, Bitcoin is likely to trade within a volatile range of $72,000 to $85,000 for the coming weeks as it struggles to find a new equilibrium. In a recent post on X, formerly Twitter, Magus shared a chart predicting sideways movement for BTC. Expecting BTC to build a range like this now, he stated, implying that investors should brace for a period of uncertainty before any major directional move. Another well-known trader, Horse, warned that weekend trading could bring even more downside pressure. He speculated that traditional finance, TradFi, investors might use weekends to hedge against potential market-moving comments from former President Donald Trump, a vocal critic of Bitcoin and cryptocurrencies. I'm guessing that BTC returns over the weekends will continue to go more negative than they already are. as TradFi uses it to hedge for anything Trump says before Sunday futures open, Horst noted. Bitcoin's 29% crash, a routine correction or a warning sign? While the recent 29% correction from Bitcoin's all-time high of $110,000 may seem alarming, seasoned investors argue that such pullbacks are normal during bull markets. Crypto analysts, in turn, pointed out that Bitcoin historically experiences 30% corrections even during its strongest uptrends, making this drop an opportunity for strategic accumulation rather than panic selling. Nevertheless, the psychological impact of Bitcoin's crash has been severe. The Crypto Fear and Greed Index, an essential tool for tracking investor sentiment, plunged into extreme fear territory, a level reminiscent of past market collapses. Retail traders, who had rushed into Bitcoin at higher prices, are now panic selling, potentially paving the way for institutional investors to scoop up BTC at a discount. Bitcoin's next move: will it reclaim $100,000 or collapse further? As Bitcoin teeters on the edge, the market remains deeply divided. Will BTC defy expectations and recover past $100,000, or is the worst still to come? Could this correction mark the start of a prolonged bear market? Share your thoughts below.